Hello guys, welcome to my video today. My name is Detective FH and today we will be doing basic accounting stuff and we will be learning how to do it. So without further ado, let's get right into this video. So before we even do anything complex or journal entries, we need to know how do all of these four accounts increase and decrease. Once we know this stuff, it would be easy for us to do journal entries and other stuff. So for our assets to increase, we debit them. For our assets to decrease, we credit them. And so therefore, our assets would have a normal balance of a debit. So a normal balance is debit for our assets only so far. Next, moving on to liabilities. To increase our liabilities, you will credit them. But to decrease our liabilities, you'll debit them. And our normal account for liabilities would be credit, CR. For our expenses to increase, we debit them. For our expense to decrease, we credit them. And so therefore, our normal balance for expense would be a debit. For our revenue to increase, we credit them. And the reason we credit revenue is because revenue increases our owner's equity. And whenever a company earns revenue, owner's equity goes up. So this is the reason we credit revenue, because owner's equity also increases when you credit revenue. And to decrease our revenue, you will simply debit revenue. And so therefore, revenue have a normal balance of a credit. So once you know this, or memorize this, or basically understand this, doing journal entries would be easy, and I'll show you guys how. So moving on, today our problem is to solve this. So what I would like you guys to do is pause the video, take some time, read through all of this. So read this, read all of the entries, and I want you guys to read this. And once you're done reading this, replay the video and we'll move on. Okay, so assuming you guys paused the video and came back, we're going to be doing the following things. Number one, let me erase it. So number one, we would record the above entries in a good journal form. We will then post them to our T accounts. Then we will be making adjusting entries. All of this are our adjusting entries. Adjusting entries. Then what we will do is we'll make our income statement, statement of return earnings and balance sheet, and a trial balance too. So as you see, please give me a moment while I drink water. Excuse me. Sorry about that. So as you see, the first journal entry has been done for us. Let's go back and let me put our journal entries side by side so it's easy for us to reference, so we don't have to go back and forth. Do this. Give me a second, guys. Documents. Just give me a second while I open up the journal entries. Okay. Here you go. So as we see, our first journal entry is the following assets were received from John Adams, cash $10,000. So we're receiving cash. That means our cash would be debit. So therefore this part is right. Our cash is debit for $10,000. As I said, to increase cash, we debit cash. Then accounts receivable, another 1,500. As I said before in my previous, all asset accounts receivable is also an asset account, and to increase an asset account we will debit it. Therefore we'll debit accounts receivable for $1,500, which is correct. Then we carry on supplies and office equipment, which are all asset accounts and which will all be debit. And since, as I said, we need to increase owner equity, and every time we want to increase owner's equity, we either credit revenue, we also credit contributed capital, since all of these four items are the contributions of the owner. So therefore this is contributed capital. The owner has contributed all these four stuff to the business. So if you add all of these up, you'll get this amount, and you'll credit this amount to increase your owner's equity. So I hope that is clear. Moving on, we'll do the second journal entry, which is on April 4th, we paid 3 months rent on a lease rental contract of $4,500. So to do this journal entry, I will be using a green pen for journal entries. So April 4th, you always write your date on the date section. So April 4th. Hopefully my handwriting is not too bad. You guys can read it. So we paid 3 months. So prepaid rent will go up. Prepaid rent. And the reason why prepaid rent will go up, because we already prepaying the rent beforehand, which is $4,500 over here. So we'll debit it. Every time to increase an asset account, as I said before, you debit it. Now, the key word here is paid. When you pay something, that means your cash is going out. You're losing cash. Your cash is decreasing because you paid something. When this happens, as I said before, an asset account, you credit it and you decrease it. In order to our cash to decrease, we will credit cash for $4,500 since we paid 3 months for rent. The key word here is paid. So I'll credit cash $4,500. This is our second journal entry, April 4th, for the rent on a lease contract for $4,500. Next transaction, April 6th. We received cash from clients as an advance payment for service to be provided, $3,000. So the key word here is payment for service to be provided, and provided is also another keyword. Received cash is also a keyword over here. Received cash is a keyword. What happened is we're receiving cash. That means our cash is going up. And every time our asset account increases, we debit our asset account. So that's why I will be debiting as cash first. So April 4th, 6th, I'll first debit cash. And it says we received cash from clients and advance payments. So we received $3,000 basically, cash for $3,000, 1, 2, 3. And then this would be unearned revenue. The reason why this is unearned revenue, we have not provided the service to the customer yet. The customer is prepaying this, so they don't have to pay us when we provide the service. Until or unless we do this service for them, it would be service revenue. But since we're not doing the service for them and they're prepaying us the money to do this service, this would be unearned revenue. We have not earned this money yet. What if the customer decides to cancel it and wants the money back? This is why we do it unearned revenue. So we earned revenue. And this would be for 3,000. In journal entries, always remember, there's always going to be something debit, and then there's always something that is going to be credit. So, sorry about that. Moving on to our next, just give me a second. Yeah, so moving on to our next journal entry. On April 7th, we purchased additional office furniture on account from Mortenson Company, $1,800. Keyword here is purchased on account. Whenever it's purchased on account, that means you have to pay those guys, whoever you purchased it from. So that means accounts payable. You have to pay them because you bought them on account. And since you bought the equipment or whatever this is, office furniture, your furniture will go up. And furniture is an asset, and to always increase an asset, you debit them. So in a journal entry, just remember debits always come first, credit always come after your debit. So with this entry, it would be April 7th. April 7th. So our office furniture, so I'm just gonna call it office furniture. For it is 1,800. Then we credit accounts payable since we bought it on account. As I said before, the keyword here is on account, and to always remember, accounts payable is in liability account. As I said before, to increase a liability, you credit that amount to increase liability. So in this case, that's why I'm crediting accounts payable. Moving on to our next journal entry, April 8th. We received cash from clients on account. Keyword here is receiving cash on account. This means that we got cash, our cash goes up since we received cash. So the first part of the transaction, I'll write my date, which is April 8th. We received cash, the cash is debit. Debit always increases our cash since cash is an asset account, and asset account always increases when it is debit. So received cash from clients on account $800, so $800 cash debit. Accounts receivable goes down. What tells me that this is accounts receivable is the keyword that I said, on account. That means this money, I was gonna receive it, but I didn't receive it now. Now that I have received this money, my accounts receivable will go down. And to decrease an asset, as I said before, you credit the amount. So that's how I know it's accounts receivable, and that's how I know I need to credit it. $800 credit. Moving on to our next journal entry. On April 11th, we paid cash for newspaper advertisement. Keywords here is paying cash and newspaper advertisement. Usually when big companies, when they pay for advertisement, this is basically an expense. It would be, the account for this would be advertisement expense. Because think about it, let me think of a good example. Expense. So if I go to, let's say if I own a business, I wanna market my water bottles. These are my water bottles. I go to a advertising company and I tell them, advertise my water bottles. So the benefit I'll get if they advertise my water bottles, I'll get more customers and more people would know about my product. Now this advertising would be an expense to me because I am the one choosing to advertise my water bottles to get more customers. So basically anything that you buy that will increase your revenue will always be an expense. Rather it would be advertisements, or rather it be wage, or rather it be something else. So for this journal entry on April 8th, I'm sorry, we're done already. April 11th, my bad. April 11, 4/11, we paid cash. That means our cash is decreasing, so I'll come to that after. But newspaper advertisements, so I'll just call it advertisement expense. Advertisement expense. And as I said before, beginning the video or before even coming to journal entries, to increase our expense we debit it. That's why we will debit this amount. So advertisement expense would be debit, and it was, I believe, $120. So 120. Cash, since we paid cash to these guys, cash decreases. Cash is an asset account, and to decrease an asset account you credit it, so that's why I will be crediting our cash. Cash over here, 120 credit. Moving on to our next journal entry, which is April 12th. We paid Morrington Company or Morrill Company, whatever it's called, $800 for debt incurred on April 7. Okay. So guys, I just realized that I missed the 3rd April 4th journal entry, which was they paid the premium property and casualty insurance policy for the year $1,800. Again, keywords are here: paid and insurance policy. And for this transaction, what we will do is, since we are paying them, and this is, by the way, if you ever miss an entry, just don't get like hesitant or just get worried. Just either make that entry in the end, but in this case I'm just gonna put it in between, so that's how I will do it. I'll just put it in between since I forgot it. But usually on an exam or on a test, just ask your TA or teacher, you missed this and what can you do to cover it up, like you missed it. Of course, like there has to be some solution for it then. Anyways, so since I missed it, I'm just gonna put it in between over here and I'm just gonna highlight it. So on April 4th, we paid cash for insurance. So we haven't used this insurance yet. It's kinda like rent, so I'm just gonna call this prepaid insurance. Prepaid insurance is an asset account. As always, to increase an asset, you'll debit the amount. Prepaid insurance, and I believe it's $1,800. Yeah, $1,800, and you credit $1,800 cash. Since you paid for it, your cash went out, your cash decreased, and every time you decrease an asset account, cash is also an asset account, you credit the amount. So I'm just gonna highlight this so I know I missed this, and so I don't make a mistake in the future while making my trial balance or income statement. So I'm just gonna highlight it. Cash 1,800. Okay, everything's good. Moving on to our next journal entry, which is on, let's see, so my last one was on April 11th, so we're on April 12th. April 12th is when we paid Morrill Company $800 for debt incurred on April 7th. So whenever you incur debt, that means you have to pay it. Debt, think about it as you have to pay for it. So automatically when you have to pay for something, that means it's in liability account. To increase a liability, you credit. Decreasing, you debit. So in this case, we incurred this debt, so we paid cash for this. It doesn't tell us how we pay it for it. Anytime when that's the case, just assume you paid cash for it if it doesn't tell you. So our accounts payable would decrease in this case, and it would decrease because it's in liability account, and to decrease a liability account you credit it. So let me just write down my date for 12 accounts payable. I'll debit it to decrease, which is $800, I believe. Yep, $800. And our cash decrease, so I'll credit it for $800. It doesn't really specify us, but anytime when this is the case, you just assume they use cash. Moving on to the next journal entry, which is on April 15. So for April 15, okay. Recorded service provided on account for the period April 4/15, $2,250. Okay. So moving on to our next journal entry, which is April 15. Sorry about that. Excuse me. So we recorded service provided on account for the period April 4th to 15, $2,250. Keyword is here service and on account. Every time you see you provide or sell something on account, this means we're automatically talking about the accounts receivable account. And accounts receivable account is our asset account. To increase it, automatically, you'll debit the amount, and to decrease it, you credit it. So accounts on account is the keyword that tells me I'm gonna use accounts receivable, and I'm gonna debit this amount by $2,250. Wait a second. Okay, here, 2,250. Note that it does not say cash. If it would have said cash, I would have put cash instead of accounts receivable. But since it's on account, the keyword account, that's why I'm using accounts receivable account. And this would be service revenue. The reason this is service revenue because you have provided this service. If you did not provide this service and you already received the money, then it would have been earned revenue. But since you provided this service, this would be service revenue, which I'll credit the same amount, $2,250. Again, I already said to why we credit revenue. It is because to increase our owner's equity. Just give me a second while I drink my water. Thank you. Excuse me. So moving on to our next transaction, which is also April 15. So I'm going to write down my date, April 15. So it says paid part-time receptionist for 2 weeks salary, $400. Keyword here is paid and part-time receptionist, and salary is also keyword. Whenever you see salary or wage, it means it's an expense you have incurred. You're paying them, and paying them is their expense or expense here. And since you paid them, it's an expense you incurred. You also lost cash since you paid them. Anytime it says paid them, just assume they used cash to pay the employees or whoever it is. So for this journal entry, we would debit our expense. In this case, since it says salary, I'm going to use salary expense. So salary expense would be debit. Anytime you want to debit an expense account, as I said in the beginning of the video, you want to debit the amount. So salary expense would be debit by, since we paid her, how much did we pay her again? Let me double check. Yeah, we paid her $400, so it would be debit by $400. Salary expense, and then you credit cash since you lost that money because you paid the receptionist. Cash would be credit $400. Moving on to our next journal entry, which is also April 15. So for 15, recorded cash from Okay, recorded cash from cash. So moving on to our next transaction, April 15. I have already written down my date. It says recorded cash from cash clients for fees earned April 14, $3,175. Basically, for this accounting entry, my keywords that are is cash, recording cash, and fees earned. Whenever you see recorded cash, that means you earned cash. Again, you guys might be tired hearing me saying this all the time, but to increase cash, since cash is an asset account, you will debit cash. The reason I'm debiting cash, I recorded cash, that means I got in cash into my bank account, so my cash account would increase automatically. This is common sense and logic. So where was I? So I'm on April 15. So I'll credit cash for $375. And every time you see fees earned, it basically means it's your revenue account. So basically you provided revenue. You provided this service to the customer, but now they're paying you cash. Sometimes it will use fees earned to trick you, but it's generally whenever you see fees earned, just think about service revenue or sales revenue. So in this case, for me, it would be credit service revenue with $3,175. Moving on to our next transaction, which is April 18. This one is a pretty easy one, I believe. April 18. We recorded. Okay, we paid cash for supplies, $750. So now, since I paid cash for supplies, that means I bought those supplies. When I bought those supplies, my supplies account would increase because I bought them. They're mine now. They are my assets now. So this is the reason why they would increase. Since I bought them, they're mine now. I own these items. The person who I paid to no longer owns these items. So automatically I know my supplies. Keyword was supplies here, by the way. Just let me know, since I paid for them, I'll debit them, since asset increases when you debit them. So $750 for supplies. And since I paid cash, again, whenever you pay cash, this is common simple logic. Your money goes away. You no longer have that cash since you paid for your supplies using cash. So cash goes out, and whenever cash goes out, I'll of course credit it to decrease my cash account. So $750. Moving on, April 22. We recorded cash from cash clients for fees earned. This transaction is basically the same as the April 15 one we did above here. It's the same. What happened? Sorry about that. Nope. Sorry about that, guys. So anyways, April 22 is same as April 15, the last transaction. So I'm just gonna do this. April 4/12. It's actually April 22, my bad. So 4/22. It's basically recorded service. So I'm looking at the first one after the supplies. Recorded service provided an account on April 12. So it says provided on account, which automatically means accounts receivable, as I said before. So I'm just going to use the short form for accounts receivable, which is AR. But on an exam or a test, just confirm with your teacher if you could use short form. So I'm just going to use AR for accounts receivable. That would be, so it's 1,100. So debit. Then you credit service revenue since you earned it. you already provided this service. And 1,100. Moving on, April 4, 22. You recorded cash from cash clients. So basically, I received cash again. My cash increases. The cash in my bank account increases. Pretty obvious, common sense. So cash. To increase my asset, as you know, cash is an asset account. You'll debit it to increase it. So cash from cash client fees earned is April 12, so it would be 1850. 1850. And this would also be service revenue, by the way. The keyword here that tells me that this is service revenue is basically fees earned. Anytime it's fees earned, you'll just assume it's service revenue. $18.50. Moving on to April 27. So now we paid part-time receptionist for 2 weeks salary again for $400 on April 27. So as you know, it's your salary expense since you paid her, and it also says salary, and if it said wage, I would have used wage expense, but since it's salary over here, I'm going to use salary expense. Again, keyword here is salary. So before moving on to April 27, I just realized I skipped April 25. That is my bad, I'm sorry. So I'm just going to do April 25 real quick. April 25. So we received cash from clients on account. So cash, received cash is basically the giveaway that you got cash for 1,600. And it says on account. That means we were supposed to receive this money, but now they have paid us this money. So accounts receivable will go down since they have paid us this money. So we 1,600. Every time to decrease an asset account, as I said, you will credit them. Now moving on to April 27. You paid your part-time receptionist 2 weeks salary again. So I'm going to use salary expense. Keyword here is salary. If it said wage, I would have used wage expense. Really doesn't matter though. Depends on what word they use. Excuse me. So we paid $400. Since we paid our receptionist, we're paying her to using cash. And so our cash would go down since we lost that cash. So moving on to April 28, we paid telephone bill for April. So April 28. Oh, my bad. Sorry. We'll use for 28. So pay telephone bill. Keyword here is pay telephone bill. Whenever you pay for something, whether it's for a bill or something else, it's always an expense for you. You're paying it, you're using cash to pay it, it's an expense for you, it's an expense for your business. So it would be, so I'm going to use telephone expense in this case. Telephone expense, and since I incurred this expense, and to increase an expense account, as I said before in the beginning of video, you'll debit it. So this is why I'm debiting expense over here. I want to increase my expense account. So debit expense for the amount they tell us, 130. Since you used cash to pay your bills, by the way, whenever it doesn't tell you what you used to pay, it's automatically you assume you used cash to pay them. And we already know from our past journal entries, your cash will decrease since you paid them. Your cash went out. So I'll credit cash for 130. Next journal entry is April 29. You paid electricity bill. It's basically the same. This time we're just paying electricity. So I'm just going to use electricity expense for 20. I believe it's 29. Yeah. So electricity expense. Sometimes the company would use utilities expense, so you wouldn't write telephone or electricity expense. But for this company, they have a separate account for these expenses, so that's why I'm using electricity expense. But usually you'll put these under utilities expense. Anyways, since we paid for it, as I said, for the above transaction, your cash went out. It's an expense, so you'll debit this amount to increase your expense. Cash is credit since you used cash to pay the bill, so you lose $200 cash. Moving on, April 29. 429. You paid okay, no, I'm on the next one. Recorded cash from cash clients for fees earned April. So again, you receive cash, so your cash increases, your debit cash. And how much did we receive? 2050. And anytime, as I said before, it's fees earned, you assume it's service revenue. For this case, since this is a service business, it would have been a goods business, I would have wrote sales revenue. But since this is a service business, it's service revenue, and you credit the same amount, 2050. I'm sure by doing numerous examples from above, you guys would have automatically guessed it. I would have done this. Moving on, April 29, recorded cash from cash clients. So I'm already done that. April 29, recorded service provided on account. So on account, as I said, means accounts receivable. Since you have already provided this service, it's not unearned revenue. You have provided the service, that's why it is service revenue. So moving on, April 29 again. Recorded service provided on account. So accounts receivable would increase. Since I provided the service on an account, I'm expecting to receive $1,000 somewhere around this month maybe. Who knows when are they gonna pay. And then service revenue is also $1,000 then. $1,000. Again, April 29, John received $45,000. So moving on to our next entry is John received $4,500 from the company as his salary. I want to double check if John is the owner. And yes, John is the owner. So basically, this entry, it's kind of funny. The owner himself is paying himself $4,500 as his salary. So since he's paying himself as his salary, this would be salary expense, and you'll lose cash since the owner is paying himself, and you debit salary expense. So salary expense. And I know I forgot to write my date, so I'm just gonna write it after this. So my date is April 29. 4/29. So John paid himself $4,500, so also every time when you make a journal entry, just make sure to leave a space. It looks nice, which I didn't, so I'll just do it right now. Here you go. 4/29. Salary expense. For 4,500. I'll credit cash for 4,500 since I'm as the owner and I'm paying myself. So yeah, these are the journal entries. Let's check if we made any mistakes before moving on to do anything else. I have the answers over here, by the way. I'm gonna check if we made any mistakes. so we can correct it. So I'm going to be using a red pen to check. So for our first entry, we did prepaid rent $4,500, cash $4,500. We're right. Then, since I skipped this one, this prepaid insurance is over here. Prepaid insurance, cash 1,000, 8,000, 1,800. We're right. Moving back to 4.6, cash and in revenue. We're right with $3,000. Yep. Office furniture or equipment is the same thing. I'll just correct it. Equipment would be accounts payable 1,800. We're right. Check mark. Cash and accounts receivable. Yeah, $800. Check mark. Moving on, as I said, it would be advertising expense. Cash 120, 120. We're right. Check mark. Accounts payable, cash 800, 800. We're right. Double check. Accounts receivable, service revenue. Then once I write everything I right. See, we did everything right so far. Salary expense and cash will be 400. We're right. With cash 375. Service revenue. Yep, we're right. Supplies and then cash for 750. We're right. Accounts receivable, service revenue 1,100. Yep, we're right. Cash and service revenue 1,850. Yep, we're right. Cash and accounts receivable 1,600. We're right. Salary expense and cash. We're right. Like I said, this company had a separate called telephone expense. Usually this would be under utilities expense. But for they use electricity under utilities expense. Every company has their own thing, so I'm just going to cut it off and just correct it to utilities. Anyways, other than that, everything is right over here. Yep, we're right. Cash and service revenue for 2050, we're right. Accounts receivable and service revenue, we are right. Salary expense and cash, $4,500, we are right. So this is how you do your journal entries. Now moving forward, our next step is we have to post these transactions to your account. So now we'll do just that. So moving on, we'll be doing as our second instruction is, we'll post our transactions that we did in our journal entry to T accounts. So we'll need our journal entries over here. And moving on, I have my T accounts set up already for us. So since I can't view my journal entries, I'm gonna use their journal entries. It's technically the same thing. There's nothing different from what they did and from what I did. As you guys know, we checked our answers anyways. So I'm just gonna use theirs and I'm gonna post our transactions to our T accounts. And so as you see, the first one has already been done for us. I'm not gonna worry about that. I'm gonna use green for the ones that I'm gonna do. So as we see over here, prepaid rent and then cash. Cash is being credited. So I'm gonna credit cash now for 4,500. I'm gonna write the date when it happened, so it's also 4/4. Like that. Next, prepaid insurance. Cash is being credited again. I'm gonna post cash 1,800. 4/4. Now I'm gonna debit prepaid rent as it shows. So they didn't give me an account for prepaid rent, which I'll make my own right now. So I'll name this prepaid rent. prepaid rent. Prepaid rent is being debited by 4,500. So all I'm just doing is just posting my entries to T accounts, and I'm just writing dates for reference. That's all I'm doing. Prepaid insurance is also not given, so I'm just gonna write it down. Prepaid insurance. This would be, so prepaid insurance is debit. It's an asset account, so it will be on the debit side. By the way, for those of you who are confused, this is always debit and this side is always credit. Credit equals negative and positive for debit. And the same is for everything. Moving on. So it looks like I'm done posting my prepaid rent cash and prepaid insurance and cash entries. Now I'm going to post my cash and unearned revenue. So cash is being debit, so I'm getting $3,000. For debit, I'm just going to use a different color for cash, just for, so it's easy after. So 3,000 debit, and this happened at April 6th. Then unearned revenue. Let's see if the unearned revenue account is given, or else I'll make my own. It looks like it's not given, so I'm gonna make one in the end over here. Earned revenue. Unearned revenue, and it's credit. So $3,000. 1, 2, 3. So I'm done posting April 6th. Now I'm going to post April 7th transaction, which is office equipment worth $1,800. I think office equipment was given to us. If not, we'll just make one right now. Yeah, office equipment is given. So it's being debit $1,800. So 4, 7, $1,800. And then accounts payable is being credited by the same amount, so we're gonna check if accounts payable is given. Nope. I'm gonna make one over here for accounts payable. For short form, I'm just gonna use the short forms A/P. It's being credited $1,800. Happened on April 7th. 4/7. Moving onwards, cash is being debit again on April 8th. I'm gonna post using a different color for debit for cash. So 4/8 cash, 800 accounts receivable, which is also 800. It's being credit this time. Accounts receivable is being credit. Advertising expense, I believe it's not given, so I'm just gonna make my own right now. Okay. I'm just gonna use short form just for time's sake. So it's debit 120. It was done on 4 April 11th. Then I'm gonna credit cash. Cash is being credited by 120. That happens at April 11th. Moving forward, accounts payable on April 12th. It's being debit by 800. I'm just gonna find my accounts payable wherever I made it. Here it is. So it's being debit 800. So debit 800 accounts payable on April 12th, 4/12. And cash is being credited by 800. So credit cash 800. As you see, cash is being credited, so I'm going to put this amount on the credit side, which is this side. And it was credit. I believe we're doing accounts payable transaction, which is 800. Yep, so it was April 12th. Moving onwards, accounts receivable on April 15 was debited 2,250. So accounts receivable over here 2,250 debit. It was done on April 15. Then service revenue, which is credit. So I'm gonna find my service revenue, which is over here. It was credit for 2,250. 250 for, what do you call it, April 15. I'm writing down the date so it's easy to track a mistake if we made any. Moving forward, salaries expense. I believe I have to make salaries expense. It's not given. Yep, I'm right. So I'm gonna make salaries expense over here. Just for time's sake, I'm just gonna use short form, but you always use your full form. So salaries expense is being debit 400 at April 15 also. So April 15. Cash is being credited 400 at April 15 also. So 400 April 15, 415. Let's go. Now we have our cash being debit again for $3,715 at April 15. Cash $3,175. Our service revenue is being credited at this point. So I'm just gonna credit my service revenue over here. So it's credit 3,175 at April 15 again. Moving onwards, supplies, they're being debited by 750 as we did for journal entries. So supplies debit by 750. It happened on April 18. Cash credit again. As you see, cash involves a lot of work. The 750 cash for 18. Moving forward, accounts receivable again, debit 1,100 since it's on the debit side. 1,100. It happened on April 22. 1,100, and service revenue is credit again, 1,850. 1,850 on April 22. Moving onwards, cash. Basically, posting entries to T accounts becomes very easy once you've done your journal entries properly. So I lost my track, so I believe I did cash service revenue. I'm on April 25 now. Yeah, cash. So 1,600 is debit. Could use a different color for cash to debit. 1,600 on April 25th. 425. So I debit cash on April 25 as you see over here. 1,600. Next is accounts receivable. It's credited by 1,600. So I'm just gonna credit 1,600 for accounts receivable. It happened at April 25. 425. Moving onwards and moving forward. Salaries expense 400 is debited. I believe I made a salaries expense account here before. Yeah. So on April 27, we incurred salaries expense, so we debited $400. Cash, we lose cash as we know. So $400 cash would be credit for on April 27. Next, moving forward, telephone expense, same thing. I'll look for telephone expense if there's an account made already. So I'm just gonna make a telephone expense account right over here. Again, I'm gonna use short form just for time's sake, but you guys should write like telephone expense fully. 130. This happened on April 28. Cash again goes down on April 28. Cash, what was it? 130 on 4/28. Moving forward, utilities expense. I'll have to make that account. It's not being made. And I'm gonna use short form, but it's recommended you guys use full form on your exam and test, otherwise your prof or TA might take off marks, who knows. Anyways, debit 200 as it is in the journal entry, and cash is credit 200 as it is in journal entry. Happened on August 29. Again, cash is debit 2050 on August, I believe, 29. So August 29, cash is being debited by 2050. And then sales revenue is also being debited by 2050. It was a sales revenue account, I think it's below, yeah. So far, they're all credit entries for sales revenue, which is completely fine though. April 29. Moving forward, I believe I'm on April 29 accounts receivable, which is $1,000. So April 29, 1,000. Incurred service revenue again for $1,000. Service revenue is here for 29 on April 29. Finally, our last one to post is salaries expense, which is 4,500. I believe salary expenses over here. Oops. So it's 4,500. Happened on August 29. Cash goes down by the equivalent amount. So since I'm out of space, I'm just gonna do it over here. 4,500 cash. Happened. I'm gonna write the date over here since there's no space. I don't want to mix up the numbers. On April 29. So now we're just done posting our T accounts. I'm not gonna check if I did them right just yet. We'll make our adjusting entries, and then I'm gonna post these again with adjusted entries, and then we'll check if we did them right. As you see, we're done posting our journal entries to our T accounts. Our next step, it says to do adjusting entries, so I'm just gonna do that right now. Just give me a second. Here you go. This is our journal. I don't need that. No. I'll do my adjusting entries over here. Here you go, adjusting entries. Dates are not given, so I'm just gonna use letters. So insurance expired is the keyword over here. That means I have used up $150 worth of insurance. That means I have incurred insurance expense since I used up my insurance. Sometimes the teachers would ask you to calculate this in your exam or in your test. It's not always given, but we are lucky that it's given over here. So insurance expense would be $150, and prepaid insurance would decrease by $150 then, since we have used up $150 worth of insurance. Prepaid insurance, $150. Moving onwards to B. Supplies on hand, April 29 was 1020. So I don't know what's the balance for our supplies. So I'm just gonna double check the balance for supplies. Just give me a second. So let me just double check the balance for supplies. Cash, accounts receivable. So ignore the 980 adjusting entry. Our current balance for supply should be 1,250 plus 750. So it should be our current balance for supply is 12050 plus 750 equals 20,000. That's all we needed. Okay. Usually when you do your journal entries, sorry about that, these are my phone notifications, but anyways, let's just ignore them. Usually when you do journal entries and when you post them to your T accounts, you'll already have this balance, but since I was too lazy enough to do it, I'm just gonna get it from the answer key. Alright, so to know what amount to debit credit, I want to make this supplies. I want to make this equal to supplies on hand in April equaled. So I want to make this equal to 120 basically. Now how I will do that is subtract this amount. I'll subtract this amount by this amount. When you subtract these two, you'll get, what do you call, let me double check. So 2000 minus 120, you get 980. So that means you have to debit and credit your supplies expense by $980 to get $120 worth of supplies. This is what it means. So our adjusting entry would therefore look like so supply expense. Since we used up $980 worth of supply, it's gonna be debit. Expenses are always debit. No, they're not debit. They're not always debit. They're debited when you want to increase your expense. In this situation, I want to increase my expense by 980, as we did our calculation over here. So 980 and supplies. I'm gonna credit supplies since I want my supplies to be 1020, and to make my supplies 1020, I'll have to credit supplies by 980 to do this. I showed you guys the calculation before, so yeah. So it becomes 980. This is how you would do adjusting entry B. Now let's look at adjusting entry C. Depreciation for office equipment in April was $500. This case we are very lucky. They gave us the amount that it depreciated by. Usually they don't give it to you and you have to calculate it. I don't guarantee you 100% in a tester exam you will have to calculate it. So depreciation expense goes up. Expense. And then accumulated depreciation. You accumulated this depreciation on your equipment. So just for time's sake, since I don't have space, I'm just gonna write the short form. But on the exam, make sure you write everything fully to get full marks. So it would be by 500, debit cash 500. Doing adjusting entry number D. You accrued receptionist salary on April 30. So you basically paid your receptionist $20 on April 20, which means your wage expense went up by 20. I'm just gonna write short form for time's sake. I'm pretty sure this video is pretty long by now. And cash will go down since you paid your, as I already said 100 times before, cash is going out, so yeah. E is similar to A, or pre-rent expense. Since we used up this much rent, we incurred this much rent expense in April 1050, but now I need to check, as we did for, no, it's gonna be 1050, ignore what I said. So rent expense would be 1500. Again, on an exam or a test you will have to calculate this value. It's not usually given, but in this case we are lucky it's given to us. So it would be 1500 cash. Earn 2000, it's not going to be cash. It's going to be prepaid rent. Since we used up $1,500 worth of rent, we used that up. That's why it's going to be prepaid rent, not cash. We're not paying anything, we're not doing, cash is not going out, neither cash is coming in. That's why we will ignore cash. That was my fault, that was my bad, I'm sorry. Anyways, so you earned $2,000 service that were previously paid for on 4/6. So now I'll have to check my 4/6 entry. So I'll go up. I'll look for 4/6. So it says I have earned, so this unearned revenue, now I have performed the service, so I have earned this revenue. So you already might know what would this be. So since I have earned this revenue, unearned revenue will be debit now, and service revenue will be credit. Again, I'm using short form just for time's sake. It would be 20,000. 1, 2, 3. I mean 2,000, my bad. Now we're gonna check our answer. I'm just gonna use a red pen to check our answers very quickly. I'm sure 100% everything is right, but still, it's always good to double check your work. Here are our adjusting entries. So insurance expense, prepaid insurance 150, 150, we're right. Supply expense, supplies 980, 980, we're right. Depreciation expense, accumulated depreciation 500, 500, we're right. They use salary, my bad, I should have wrote salaries instead of age, so I'm gonna correct that real quick. Salaries expense 2020, we're right, we're right. As I said, rent expense, prepaid rent, we're right. 1,500, 1,500. As I said, unearned revenue and revenue would be debit. We're right. Our next step is now we're gonna post these adjusting entries to our T accounts. So now we're gonna post our adjusting entries to our T accounts. I'm gonna do this real quick. It's just copy pasting to your T account basically. This is so insurance expense on April 30th. It's 150. I believe there's no insurance expense account, so I'm just gonna make one right now. As I was right, there's it there, and then I'm just gonna make one right now under prepaid insurance. Again, for time's sake, I'm using short form. You're expected to use long form on your exam and paper or test, whatever. 150 just goes down by 150. I'm just gonna write AJE so I know it's my adjusting entry. AJE. A. It was A. Supplies expense. There is not a account called supplies expense, so I'm gonna make one right now. Supplies expense. Again, I'm using short form. I keep on saying it. You have to use the full term, full long term on your exam. 980. Supplies goes down by 980. Again, just for reference, for my reference, I'm just gonna write adjusting entry B. Adjusting entry B. Next, depreciation expense. We need to make this account. Again, I'm using short form as I'm saying it 100 times. Please do not use it in the exam. Accumulated depreciation is also not given, so I'm just going to use the short form and make one. 500. 500. These are both adjusting entries. We don't even need to write them down. Now moving on to my salaries expense account. Salaries expense is being debit again. 20. ADJ for adjusting entries. Salaries payable. I don't think there's an account called salaries payable. Let me double check. Yeah, there is none. I'm gonna make one over here. Salaries payable. Salary payable. Again, I'm gonna use not sure from. It's 20 over here. It's pretty obvious this is our adjusting entry. Rent expense I believe was not made, but it's good to double check if we did make one. No, so rent expense was not made, but prepaid rent was. So I'm just gonna write rent expense over here. Rent expense. Again, I'm using short form. You're expected to do the full. You're expected to write the full whole thing on your exam or test. Otherwise, you'll lose marks. I'm 100% sure. 1,500. Adjusting entry, so we just know. Finally, your last one, unearned revenue. Wherever it is, it's over here. 20,000. Just debited. 1, 2, 3. You know this is from our adjusting entry. Now we have service revenue, which is credit for 2,000. Now let's check our work quickly. Sorry, I'm gonna look at cash first. So we have $10,000, $3,000, $8,000, $3,175, $1,600. We're missing $1,850 from 4/22. Let's just check. On April 22, $1,850. I probably skipped it by accident, so this is why it's good to double check. On April 22, yeah, I missed it over here. Yeah, cash 1,850. I'll just write it down right now. 4 on April 22. So I'm just checking my debit side first. 1,850. Let's double check cashing. 1,600, 2,050. So our debit side is correct. So I'm gonna put a big check mark for correction. Let's check our credit side. 4,500, 1,800, 102, 800, 400, 750, 400, 400, 130, 200, and 4,500. Credit side was also correct, so our ending balance would be on the debit side, which is 8875, as you can see. So our T account for cash was correct. Okay, so next one is accounts receivable. We'll double check. 1,500, 2,250, 1,100, 100. We're right for this side. We're correct. 8,160. We're correct. So our ending balance will be 2,450. Moving onwards to supply. As I said, everything's here. Everything's correct. So we'll be 1020. Moving on. Let's check prepaid insurance over here. 1,800, 150. So ending balance, since prepaid insurance is announced, it would be 1,650. This was also correct. What do we have next that we can check? Office equipment 9,300. Yep, this was also correct. See, everything we did was correct so far. Accumulated depreciation is pretty obvious. We got it right. Where is it? Yeah, 500. We're right. Accumulated depreciation is an expense. It's not. It's a contrast to the account. Accounts payable. Let's double check where it is. Accounts payable was 1,900 and 800. We're damn right on the point. 1,000. We're right. We'll double check our rent expense. Where's rent expense, man? Probably rent expenses over here. We're right. 1,500. Basically, that's how you do your T accounts. That's how you post them. As you see, we did it right for service revenue to 2,200 to 1,000, 1,000. You missed the service entry for 4/22. I'm just gonna make a note over here. So 2050, 1,200, which should equate to 13,425. So this is also correct. I'm just gonna make the missing amount that we missed. I don't know how we missed it, but yeah, we did miss it. 1,100. Salary playable, $20. I'm pretty sure we're right on that too. Yeah. $20. Unearned revenue, we're right on point. Utilities expense. we write on the point. Telephone expense, we write them right on the point. Salaries expense, 5,320, we're right on the point. As you guys can see, 5,320. We're right. So everything's checkmarked from this page. What's left to check is supplies and insurance expense. Supplies are already checked by the rates, right? Depreciation expense is right. Supplies expense, it's also right. As we know, expense are debit accounts, so I'm just writing it in the debit side, their total balance. Insurance expense is the last thing we didn't check, so we'll check that off too right now. Insurance expense is 150, we're damn right on the point. So everything we did was right so far. This is how you post basically your T accounts. If you asked on the exam, best way to do is always do your journal entries, then post them to your T accounts. And if they are adjusting entries, then make your adjusting entries and adjust your T accounts as we did right now. Moving on, let's see what it asks us to do next. So next, it asks us to do prepare an income statement, statement of return earning and balance sheet. Okay. Okay, so moving on. As you guys can see, there's really nothing I could teach you guys how to do adjusted trial balance. I'm just gonna go over some of the brief basics. So after making your journal entries, adjusting them, and calculating your ending balance for T accounts, so what would you do for a trial balance? You basically first list all of your assets or all of your debits first. After your debits, you list all of your payables and revenues and dividends declared, which in this case we had zero since there weren't any dividends paid out. And then after your liability accounts, you put your expense accounts. This is usually the format that most people follow. You don't need to follow this format, but this is how I do it personally myself. And so to get these values, you just look at your T accounts. That's what you do. Got this value from here, you just copy paste values. That's all you do. Supplies, you see 1020. I'll look at supplies over here, 1020. And so basically you copy paste your values, and then once you did that, your debits DR should equals to your credit. If they're not equal, then that means you made a mistake either in your journal entry, your adjusting entry, or while posting balance to your T accounts. If your debits don't match your credits in a trial balance, that means you made a mistake either in journal entry, adjusting entry, or posting entries. Posting it to your T accounts. Because we make this trial balance is just an extra step to make sure that everything balances out. Next, for income statement, there's really nothing much to teach. Just always remember to put your revenue first, then expenses, and just list all your expenses. That's all. Again, we get this value from our T account. I'll show you. Service revenue over here. So it's really easy to do everything, to make your financial statement, everything once you're done your T account. All of these values We get them from our T account's final balance. That's it. And to get net income and net loss is pretty simple. You do revenue minus your total expense. Moving onwards to statement of retained earnings. We had no retained earnings, so that's why it's a 0. Net income comes for your income sheet over here. That's where you get net income. We didn't pay any dividends, so we retained earnings of 4,525. That's it. Moving forward. Now we're gonna make the balance sheet together since that's kind of complex. Some people get mixed up. So I'm just gonna get my T accounts open so I can reference back and forth while making the balance sheet. Over here, I've already made a simple balance sheet template. In a balance sheet, you always first list the assets, then your total asset, then you list your liabilities, then all your liabilities, then you list your equity accounts, and then you basically your total liability plus equity should equal your total assets. And if it doesn't, that means there is something wrong in your balance sheet and you have made an error somewhere during your journal entries. You're posting to T accounts or somewhere, who knows. That is what it means. So assets, we had cash. Give me a second, guys. So cash was 875. Next is accounts receivable, 3450. Next, all of these amounts you just get it from your T accounts after you did your journal entries and post. I'm just gonna see where's prepaid rent. It's 3,000. Prepaid insurance is basically 1,650. Supplies 1,1020. Equipment, I know I spelled equipment wrong. Really doesn't matter since I'm not doing a test right now or an exam. On a test or exam, make sure you spell it right. Equipment is 9,300. And plus we accumulated depreciation on equipment was 500, my bad. So it'll be 200,695. Let's just double check with the answers. So far our total current asset is wrong. So that means we made a mistake somewhere. Our total asset should equal 26,795. Our total asset also equal 26,795. That means no mistakes were made. How I calculated total assets were, I took the sum of all of this, subtract by accumulated depreciation. Accumulated depreciation is a contra asset account and you always subtract all of your assets from it. That's the rule of thumb. Next, we gotta do the same for liabilities. I'm just gonna go up and check for my accounts. Just give me a second. It always gets bugged. Just give me a second. It gets bugged. Okay. So accounts payable. As you see, I'm just getting my final balance over here. This goes over here. Salaries payable 20. Unearned revenue was basically, as you see, 1,000. So just copy pasting values. Once you're done, your T accounts, everything becomes so easy. And then stockholders' equity. Our contributor capital was 2250. 2022.50. And then in returned earnings, you get this from your statement of returned earnings, which is this amount, 4,250. This is where you get your returned earnings from. So 4, 5, 25. On a test or exam, it's always best to make your balance sheet at the very last. First make it. This is how you should do on the exam. First do your journal entries, adjusting entries, post T accounts, make a trial balance, make income statement, make your retained earnings, and in the very end make your balance sheet. If you know how to do everything from this video, I can guarantee you guys 100% any introductory accounting course will pass your exam by about 50%. Anyways, that's it for today. I know this video is very long. I'm sorry for that. And I'll see you guys later. And just to double check a balance sheet, I'm pretty sure it's right. Yeah. The balance up and it matches, everything's perfect. See you guys later.